Welcome to the deep dive. Today we're digging into something, well, a bit unexpected in India's recent economic story.
That's right. We're looking at their trade performance.
Exactly. There's been this surprising jump in India's exports right when new U.S. tariffs started hitting, and now crucial trade talks are back on the table.
Okay, let's try and unpack this.
Yeah, our mission today really is to help you get behind those headlines. We want to understand the economic forces at play with India's trade figures. How are they actually reacting to these U.S. tariffs? And what's the bigger strategic picture? It's often not as simple as it looks.
Couldn't agree more. And the immediate picture, well, that's where it gets really interesting, maybe even a bit confusing. Our sources are highlighting this significant increase. India's exports went up again in August for the second month running, up 6.7% to $35.1 billion. And this happened after the initial U.S. tariffs were announced. How did that work? What's going on there? That's what I find fascinating.
Well, what we're likely seeing here is a classic case of front-loading shipments.
Okay. Basically, businesses hurried up. They expedited orders before the tariffs really bit hard. Just to clarify for everyone, the U.S. first put a 25% tariff on some Indian goods. That was August 7th. But then just 20 days later, they doubled it. A huge jump to 50%.
Wow, 50%.
Yeah, pretty hefty. And this was explicitly linked to New Delhi buying Russian oil. But even with these tariffs starting, exports to the U.S., which is India's biggest market, remember, actually went up. We're talking $40.39 billion for April to August this year, compared to $34.21 billion last year.
So a big jump despite the headwinds.
Exactly. But the key thing here, I think, is that these headline numbers can be a bit of a mirage, What looks like resilience right now might just be companies hedging before those tariffs really took full effect. The true impact, we might only see that down the line, maybe in the next few quarters.
Right, that definitely complicates the picture. So this export bump isn't necessarily organic growth, more like a strategic rush.
That seems to be the most plausible explanation, yes.
And it wasn't just exports moving in unexpected ways. The overall trade deficit, it actually narrowed in August, came down to $26.49 billion. That was better than the Bloomberg survey folks predicted. And imports actually fell by about 10%. We call less crude oil coming in, but interestingly, more gold being imported.
Mm-hmm.
So does that suggest some internal shifts, maybe some rebalancing?
Yeah.
But is it enough to counter what's coming with those tariffs?
Well, that really is the million-dollar question, isn't it? Or perhaps the billion-dollar question here. This export surge, while positive on the surface, it probably is temporary. The real test for India's trade, that starts now. Look, these 50% tariffs, they are genuinely among the world's highest. There's a real risk they could seriously damage the competitiveness of Indian goods, particularly things like textiles, clothing, the labor-intensive stuff where India competes directly with, say, Vietnam or Bangladesh.
Right, those regional competitors.
Exactly. And if you zoom out a bit, economists are saying these duties could trim India's GDP growth, maybe by 0.5 to even 0.8 percentage points.
That's quite a chunk.
It is. Now, there were some recent tax cuts in India that might offset maybe 0.2 points of that, but it's still a drag. Remember, the headline, GDP growth looked strong last quarter, 7.8%. But some analysts think part of that was, let's say, optical. Forecasts are now settling around 6-7% growth if these U.S. duties stick around. So it definitely raises questions, about how sustainable India's growth path is under this kind of pressure.
So India's economic resilience is really facing a major test now. What's the way forward then? It sounds like they need to make some moves. And our sources do point to something positive. The U.S. and India are actually talking again. They've agreed to restart trade discussions. In fact, a U.S. trade delegation is in New Delhi right now, led by Assistant USTR Brendan Lynch, meeting with India's lead negotiator, Rajesh Agarwal.
That's correct. It's definitely a positive step that they're talking.
Sure.
However, the issues on the table are the same ones we've seen before, familiar sticking points.
Like what specific?
Well, you've got market access issues, especially in agriculture and dairy. You have disagreements over high tariff peaks on certain goods, and just the basic framework for what each side considers fair trade. The White House perspective seems to be about matching foreign tariffs, reciprocity, while India, understandably, wants predictability for its exporters and also the policy space to continue industrializing its economy.
Okay, so tricky negotiations ahead.
Very likely. But India isn't just relying on talks, they're also pushing hard on a diversification strategy, almost like a hedge.
Diversification. How so?
They're actively helping Indian exporters find and explore new markets, reducing reliance on any single country, and they're pursuing trade deals more aggressively, especially with the European Union. The next round of EU talks is scheduled for October, actually. Plus, there's a push internally. The government wants to boost domestic manufacturing for about 100 specific products to cut down on import dependency. It's about reducing those geographic vulnerabilities.
That sounds like a very broad strategy. Negotiation, diversification, boosting domestic production.
Hmm.
But isn't there a risk there? Spreading resources thin, especially if the U.S. trade talks stall or drag on, it sounds like walking a tightrope.
Oh, it absolutely is a tightrope walk. That's a great way to put it. Reorienting trade takes time, it takes resources, it's costly. No doubt about it. But from New Delhi's perspective, it's seen as essential, a necessary hedge against volatility and, well, over-dependence on any one trade partner in this current global climate.
Right. So summing up then, India's trade picture shows this immediate resilience, though maybe partly artificial, but facing really significant challenges down the road.
Hmm.
And their response is this multi-pronged strategy.
Yeah.
Keep talking, but also actively branch out.
Exactly. If you step back and look at the bigger picture, India is navigating a really tricky global trade environment. They're using this two-pronged approach: keep negotiating persistently, but also diversify aggressively. So the question for you to think about is, how might these moves redefine India's place on the global economic stage? And what does real economic resilience even look like when you're trying to balance short-term gains against long-term goals in such a dynamic, sometimes unpredictable world? Something to ponder.